Okay, welcome everyone. This is Scott here again with a brand new video to help you learn how to trade, invest, and master your finances so you can apply that knowledge in the real world and multiply your money. And I do apologize in advance here if my voice sounds a bit weird. I unfortunately came down with a pretty bad cold, so just bear with me in this video. And so this video here is my next installment of my live option trading series, and this has been another pretty good week. I was able to close a few positions for profits and then put on some new positions as well. Now, as always, before we dive in here, in case you are brand new to the channel, I also want to let you know that you can find me on SKILLSHARE as well, where you can take my very in-depth classes on options trading and stock market investing. And I provided some links to some of the introductory courses of mine in the description of this video below. So be sure to check them out. And when you sign up for SKILLSHARE using any of those links, you'll get a 2-week free trial. Okay, so now diving in here, and if you did see last week's live option trading video, then you might notice here, I do have 3 new positions on. One in US Steel, another in UAL, and one more in Wynn, or Wynn Resorts. And also UAL is United Airlines. And so as usual, I'm going to stop here and play a few clips from earlier this week where I will actually show you in real time my thought process and what I was looking at when putting on those 3 new positions. So let's get started. Okay, today is Monday, August 9th, and the stock I'm looking at here is United Airlines, or UAL. And the reason why this stock caught my attention today is because we are seeing a pretty nice buildup of implied volatility. If I expand this chart up a bit, right, this spike down here is what I'm talking about. So in case you don't know, this is the chart that shows you the implied volatility for UAL over the past 1 year. And its spikes of implied volatility like this is what I look for, because this translates to a spike in option prices. And therefore, as an option seller, that's going to be advantageous for me to step in and start selling these expensive options. So right now you can see the actual level of implied volatility for UAL is just under 58%, which is definitely on the higher end over the past few months. There were just a few other spikes in the past 4 months or so where the implied volatility got back up to around this level. So this translates to an IV rank of 29%, that's not bad, and an IV percentile of 40%, also not too bad. Now, I personally do not have too much of a directional assumption for the stock. I think it could perhaps continue to climb a bit higher over the next few weeks. You can see as of late, UAL has definitely sold off pretty hard, so perhaps it could be time for a resumption back up higher. But in terms of support and resistance levels that I'm trying to identify, and that helps me pick my strikes, let's go to the drawing tools real quick, and we'll go to the trend line here. So in terms of a nice resistance point, I could definitely see that happening right around this level, around 50 to 51 bucks per share. And the reason being is because you can look in the past and see many times where this level held as support, but once UAL broke through it, this level has now flipped to resistance. And in fact, if I go back to the regular cursor tool and I zoom in a bit here, you can see right when UAL did break through this trend line, or excuse me, this support level, it tried to recover and go back above it. But ultimately here it failed, and that's why this line here, which was support, has now turned to resistance in my eyes. And then in terms of a major support level, let's go back to the drawing tools. I would say it's somewhere around this price level. Let me draw this line. Somewhere around here, which is basically 42.5 bucks per share. The reason being, and let's come back to the drawing tools again and switch my tools so I can zoom in once more. You can see way back here in February of 2021, this line did hold as support, and then once more again after this massive downturn. So like I said, this little bit of technical analysis is how I like to pick my strikes. So I'm going to sell a strangle here, going to sell an out of the money call option and a put option at the same time, and I'm going to choose my strikes to be a little bit beyond this resistance level and this support level. So I'll come back to the trade tab. And that's why, as you can see here, I'm considering selling the 52.5 strike call and the 42 strike put. And I don't think I'm going to change my mind here about that. So let's go ahead and set up this order. Going to go to sell and then strangle. And that brings up the order down here. Going to sell the 52.5 strike call and the 42 strike put, which should be right there. And I'm going to sell 2 of these contracts, 2 calls and 2 puts, for about $209 in credit for each one of these strangles. So I'll actually come down to 208 to see if I can get my order filled quickly here. And also I do want to point out that my delta on my put option is 26 and the delta on my call is 21. So this is a very slightly bullish skewed strangle, which is fine because like I said, I do think this stock could see a little bit of a rally over the next few days or weeks. And so lastly, let's come to the confirm and send button here. The buying power effect is just over $1,000. That's fine. So we'll go to send. And we're not filled yet, so let's come back to the monitor tab and take a look. So UAL should be at the bottom down here, or very close to it. There we go. So right here is my order. Again, you can see my limit price is 208, but the mark price for those strangles is just under that. So I'll come down a few more pennies. Let's come down to 206, confirm and send. And there we go. Just got filled at 207 actually. I was improved a bit. Very nice. And then of course, you know the drill. Last step here is to set up my automatic buying order to close this trade if I'm correct. Right? Perhaps if UAL stays within this price range and if implied volatility actually contracts, which is what I'm really banking for. Typically after a spike in implied volatility, you will oftentimes see a contraction sometime soon thereafter. So that's what I would really like to see. Let's come back. So once again, going to buy back the 52.5 strike call and the 42 strike put. And I'll do so for half price. So half of 207 is basically 103. Close enough. Make it a GTC order. And oops, I forgot we're going to buy back 2 contracts each, not 1 contract each. And then finally here, confirm and send. Now we're all done. All right, today is Tuesday, August 10th, and the only stock here that I could find with somewhat decent implied volatility is Wynn Resorts. Right, it seems as of right now, at least, implied volatility across the board is on the very lower end. And in fact, if we come over here and look at the VIX futures real quick, and again, in case you don't know, the VIX futures contracts will show you the implied volatility for the S&P 500, which of course represents the majority of the market. And if I zoom in here a bit, you can see we've had 1, 2, 3, 4, 5, 6 down days in a row of contracting implied volatility, of contracting option prices essentially. So needless to say, because of this fact, that's why it's very hard to find any stocks right now that have high priced options. But if we come back to Wynn Resorts one more time, you can see down here in the implied volatility chart, there is a somewhat moderate buildup of implied volatility. This was leading up to the earnings announcement that happened a few days ago. And I probably should have played the earnings announcement, but I think I just missed it for some reason. But even still, after the earnings figures came out, we still have a pretty high elevation of implied volatility. Right, the IV for Wynn right now is just under 50%. That's not bad. The IV rank is 28%. That's actually pretty fine. The IV percentile is definitely a bit on the lower end. I would like this to be as close to 50 or above as possible. But again, this is the only stock I could find with even somewhat decent implied volatility. So I am definitely bullish on the stock in the short term. As you can see from recent history, the stock has just gone down by a pretty massive amount almost every single day. So I was considering selling a naked put option on the stock, but if I zoom in here a little bit, if I had seen this stock on this day in particular, which looks like was right before the actual earnings came out, then yes, I definitely would have sold a put option on the stock at this time. Right? For me, my style of trading, I like to get on the opposite side of what the herd is doing. And so in this case, the masses in the market were just selling the stock off every single day in a row. And eventually, I would have been interested to step in and sell a put option and get bullish on the stock. Basically, take the other side. And that's exactly what I did with my AMD trade. Let's look at that real quick. Right, in this case, this was just the opposite kind of trade where the stock was going up every single day. And then it was around this time period where I stepped in and sold the other side, went against the herd and sold a naked call option and got bearish on the stock. And eventually, I have been correct so far. Right, even in a very strong uptrend or a very strong downtrend, stocks do not just go down or up every single day in a row. There is usually a nice back and forth movement or motion leading to the destination of wherever the stock wants to get to. And so again, that's why, coming back to Wynn now, that's why if I actually saw the stock on this day, on the 5th down day in a row, then yeah, I would have stepped in and sold the put option. But because I missed this point, and now the stock has rallied a little bit, combined with the fact that implied volatility has contracted, I don't want to sell just a simple naked put option. I want to keep my strikes a bit further away from the stock, basically give myself more cushion for the stock to potentially move back down. And so now what I'm going to do is sell a bullish skewed strangle. Right, so instead of selling just the 95 strike put option here, I am now going to sell the 92.5 strike put option along with the 115 strike call option. So with the delta on my put here being 35 and the delta on my call being only 12, that definitely makes this a pretty bullish skewed strangle. So in this way, I still get to maintain my directional bias on the stock and also push my strikes specifically on the put side a bit further away and also still collect a decent credit. So if I right click on the call option here and go to sell and then strangle, that brings up the order down here. So we're going to sell 1 contract of the 115 strike call option and 1 contract of the 92.5 strike put option. The total credit I would receive on this one trade is around 430 bucks. That's pretty good. So finally, let's go ahead to the confirm and send button. Buying power effect is just under 1,500 bucks. That's fine. So we'll go to send and see what happens. And so no fills yet on this order. Let's come back to the monitor tab, and my win order is right there. So my price is 429 and the mark price is just beneath that at 428. I'll come down a few more pennies. Let's go down to 426, confirm and send, and maybe I'll get filled here. And still nothing yet, so at this point I'm going to sit on this order for a few more minutes and just wait and see if I do get filled at my price, and if not, maybe in 5 or 10 minutes or so, I will walk down the price a bit more. And oh, there you go, just got filled at 427. Sometimes being patient pays off. So now that I'm filled, I can go in and set up my buying order to close out this position, and ideally for a profit. So we'll buy back the strangle here. Again, buy back the same strikes, so it's going to be the 115 strike call option and the 92.5 strike put. There we go. And I'll buy it back for half price. So half of 427 is about 213. Make it a GTC order, and then we're all done. Okay, today is Wednesday, August 11th, and this is going to be a very different kind of trade than what I normally do. And so what I'm looking at here is United States Steel, or just X for the ticker symbol. Now, as you can see up here in red, I've already gone ahead and drawn a resistance level that I've identified. Right, you can see 2 times in the past where this stock got up to this price point, around 28 or 29 rather dollars per share. Once it reached that point, it was immediately repelled off that. So I do think there is a pretty significant resistance level somewhere around this price. And as of right now, look what's happening. US Steel once again has made it all the way back up to this point. And I'll zoom in here a bit more so it's easier to see. And you can see yesterday, it exactly touched that resistance level and then backed off of it. And then today, same exact thing, touched the resistance point, and now it's really backing off it. So my assumption here is that over the next few days, we could see US Steel come all the way back down to maybe 24, 25 bucks per share, or perhaps even break down lower, maybe down all the way to the bottom end of this range near 21 bucks per share. And so I did already go ahead and make a trade based on my assumptions here. And like I said, this kind of trade is going to be very different than what I normally do. And that's because if you look at the implied volatility down here, you can see it's on the very, very low end of the range for the past 1 year. Right? The IV rank is only 9%, IV percentile is only 4%. So specifically, this means only 4% of the days over the past year had implied volatility less than where it is right now. And right now, the implied volatility is at 61%, which is still not bad for an individual stock. But because the implied volatility for US Steel can definitely be much, much higher than where it is right now, that's why for this position, I did not sell any options. Right, I'm only ever going to be interested in selling options when implied volatility is very high relative to where it's been over the past year. This is the exact opposite kind of scenario, which requires the exact opposite kind of trade. So that means coming to the trade tab here, I just put on a put debit spread. So specifically here, I purchased the 28 strike put option and then sold the 25 strike put option. And I bought 2 of these put debit spreads, so 2 contracts each here. And I bought each of them for 80 bucks as a debit, so in total, that's 160. So definitely a very, very cheap position, which is why I was actually somewhat inclined to do this. Typically, I would almost never ever buy options. I'm strictly 99.9% of the time an option seller, but I saw this trade setup here and I thought it was a pretty good situation. And also I could not find a single other stock on my watch list that is worth selling options on at the moment. So this is the best that I've got right now. Implied volatility is very, very low across the board currently. And also I bought these debit spreads in the August expiration cycle, which expire in only 9 days. So I am banking on this to be a pretty short-term trade. Hopefully just over the next week, we see some sort of resumption back down lower. That's all I'm looking for. Right, you can see back when this happened last time, there were a few pretty big down days that happened very quickly. If that can happen again, that would be ideal. And if not, if I'm totally wrong on this trade and US Steel just blows higher and finally turns this resistance level into support, then not a big deal. I'll lose 160 bucks, a very small amount of money. So I kept my risk on this trade extremely, extremely small. Okay, welcome back. I hope you enjoyed those few clips there and found them to be insightful. So now let's go through and just do a quick checkup on my current positions. And so first up, we have US Steel here, and shame on me for deviating from my option selling strategy and actually buying options in this case, because as you can see here, I'm actually down on this position by about 100 bucks. Still about a week left to go on this position, so anything can happen. And at this point, I'm only about 60 bucks away from reaching a max loss scenario. So I did keep my risk on this trade extra small because I did buy options with this one. And that is something I almost never ever do. So if we come to the charts real quick and go to US Steel, which I already have pulled up, let's zoom in a bit here. And so just when I thought I was correct on this position, right, you can see just after US Steel touched this resistance point, it did back off 2 days in a row. So I was thinking this was looking pretty good, and then today, boom, totally undid all of that. And now we're pushing above this resistance point. So definitely a bit unfortunate, although like I said, there is still a full week left to go and anything can happen. Right, for example, you can see over here, the first time the stock reached this resistance point, it did pierce through it quite a bit and then come all the way back down. You never know, that could happen here. And since I only have 60 more bucks to lose, I may as well just keep this position on and hold it all the way to the expiration and just see what happens. So now let's come back here to the monitor tab. Next we have my AMD naked call position, which today is not looking so good. I am down about 110 bucks just today, but still overall, I'm up about 157. So let's come to the charts real quick and take a look at what's going on there. And as you can see, I'll zoom in a bit. Just like US Steel, we have a very large update today, and that is what's causing my position, which is a short naked call position, to lose money. But the stock still is significantly lower than where it was when I sold that call option. So I believe it was somewhere around this point where I sold that call, and we did get 1, 2, 3, 4 down days in a row, a little bit of sideways action, and then today, one big up day. Now I have not reached my profit target on this position yet, so I am going to keep it on. I do think this stock could see a bit more downside like it did over here, right? All this is basically a smaller version of what's happening over here potentially, right? We had a lot of up days, a big down move, a short-term rally, and then another big down move. So perhaps that could be mirrored over here, big down move, short-term rally, and then hopefully another resumption down lower. That's what I would want to see. But of course, with option selling, the main advantage is you can still be directionally wrong and come out with a profit, right? So with my call option here being at the 120 strike, which you can see right here, all I really need is for the stock to be below 120 by the expiration date. Or if the stock does turn around and just charge higher, then perhaps I can buy 100 shares of this stock once it gets above 120 and therefore turn this position into a covered call, which ultimately means even if AMD goes to the moon, I will still have the potential to profit on this position. But we'll just have to wait and see what happens. Let's come back. My RCL short strangle is looking pretty good. Overall, I'm up about 111 bucks on this position. So very quickly here, this was just a simple earnings trade where I sold a strangle around the stock right before the earnings came out. Right, you can see the earnings happening right here on August 4th, and the stock is up a little bit since then, but not by that much. And also, we are seeing a pretty nice contraction of the implied volatility for this stock. So this contraction combined with time decay is, I think, the main reason why this position is profitable right now. But still haven't hit my profit target yet, so I'm going to keep this position on for a bit longer. Let's come back. Next up, we have my UAL position. Same kind of thing, short strangles on this stock. And we're also looking pretty good on this position right now. Overall, I'm up about 76 bucks. So let's check out the charts real quick. Go to UAL. Now, unlike RCL, we have not seen that much of a contraction in implied volatility. It's pretty much at the same point now as when I put the position on earlier this week. But also, if I zoom in here, the stock has gone absolutely nowhere, just sideways. So as a result of this, as a result of just this sideways price action, that's why I attribute the profits on this position currently to be mostly a consequence of just time decay. Right, if the stock is just moving sideways and you're also not seeing a contraction of implied volatility, then the only other way an option seller can make money is simply with the passage of time, which will always slowly deteriorate the value of option contracts. And finally here we have my new Wynn strangle. This was a slightly bullish skewed strangle, so we'll come to the charts real quick and take a look at that one. WYNN. And this is a pretty similar story as with my UAL strangle, right? Just some more sideways price action. Stock hasn't really gone anywhere. Had a little bit of contraction in implied volatility, but not much. So once again, I'm attributing the profits on this position, which is only about 40 bucks right now, as a consequence of just time decay. But this also definitely illustrates the power that comes with selling options. You have 3 different ways you can make a profit. You can profit with a directional move that you got correct. You can profit with a contraction and implied volatility, and you can profit with time decay, which will always be the case because time always marches forward. And if you can get all three combined working for you, that will make for very, very fast profits. And lastly here, I did want to mention my other positions that I took off this week for profits. So specifically, if you did see my live trading video from last week, then you would know I had a position on in GameStop. I had a short strangle on this stock. And this was one of the positions I took off for a nice profit this week. Once again, very similar story to my Wynn and my UAL strangles, just some more sideways price action. Took advantage of that time decay and a little bit of contraction of implied volatility. So that was a nice $400 in profit on this position. I also took my position off in Uber. This was also an earnings trade where I sold a short strangle. And so as you can see here, this was the earnings date on August 4th. Very nice buildup of implied volatility beforehand. And then once those figures came out, boom, huge contraction of implied volatility combined with a very small move in the price of the stock. And looks like I was correct here on this pattern repeating, right? If you saw in the past, we're currently in this pattern of a short-term rally up to about the 20-period moving average and then a pretty big sell-off. You can see it again here, short-term rally, sell-off, and then once more, it's also playing out again at the moment. And then lastly, also I took off my position in Beyond Meat. And this one here was one of my best earnings trades ever because I was able to take it off the very next day from putting it on. So right here, there were earnings on August 5th, and right beforehand, I sold a short strangle to take advantage of this buildup of implied volatility. Then the figures came out, boom, huge crush of the implied volatility combined with a very, very small move of the stock the next day. So this is why I do love earnings trades because one, these stocks often have the highest implied volatility across the board, at least right before their earnings announcement. And then two, once those figures come out, you almost always see a very large crush of the implied volatility afterwards. So these are very, very advantageous situations for option sellers. And so with that being said, that's going to conclude this video. I'm not going to put on new positions today because again, I'm not feeling well. So I'm just going to try and get some rest and then come back for next week. And don't forget, if you want to take some very in-depth classes on options trading and stock market investing, then check out my SKILLSHARE courses, links in the description of this video. And finally, if you enjoyed this video, then please give it a thumbs up, drop a comment, and subscribe to my YouTube channel. I drop new videos every single week and you don't want to miss out. So thanks again for watching, and I'll see you next time.